Agents contagion. Good morning, guys. Good morning, guys. Welcome to this Friday, February 21st. And we have a pretty much a holding pattern, holding on to where we left it off yesterday. You can see how that capital flow is all coming to balance. The mode has moved up to the 61.37s. And that's a pretty interesting dynamic. So yeah, a lot of volume traded right there at that level. They haven't been able to bust through it yet, but we'll see. Maybe they'll be able to eventually. The news we have for today, the news this morning, 9:45, we get PMI composite, existing home sales at 10, consumer sentiment at 10, and that is about it. Couple of speakers at 11:30. Jefferson and Daly. But at this point, news at 9:45 and 10, that's what we got to contend with. I'm not sure that either that news is going to really do a whole lot in terms of direction. We'll see. But it's 9:45 and 10 o'clock. And it's a Friday. Thank God it's Friday, right? It's a short week, but right now we are still right up here against the highs, and so far the market has not. The bears have not been able to take charge in this. So far, the dynamic is to the upside, and let's see if they finally going to get a little pop here or some attempt to take this higher. But it's definitely a market which is in a bit of a holding pattern, pending the fallout of tariffs, fallout of these new policies. They'll only be 4 weeks of a new administration, and we've got so much stuff going on. It's hard to keep track of. But I would start off today with a same as pretty much yesterday. I adjusted some of these edges a little bit. That 6110 edge, I dropped it down to the 6100s, given this move down yesterday. Fair amount of volume traded there. So this whole low volume area now, basically bracketing it with an edge at each of these areas. There could certainly be an edge in between here still. It's just not going to be that obvious. All right, so starting off range bound, bias is still to the upside, but I would just emphasize range bound trading. So you can tell, maybe you get one day with a nice run to the upside, we get another day with a pretty good sell-off. I know for this morning, the biggest news I saw this morning was really the United Health falling apart, down like 11% in the pre-market, $55, based on a DOJ investigation on Medicare or Medicaid payments or something like that. So that would do it for you, right? $50 down on the stocks. That's pretty brutal. So, but starting off range bound, looking to buy weakness at this point. There could be an edge here at the 6130. See that four little edge? I'm just dropped it a little bit below that to match up with these prior edges. So I think the stronger edge is a little bit lower at the 26, 28 level. So not quite 25, but it's just between them here. So first support area about 6127, 6120s. 6105s, the support areas I'm looking at, right? 6095 is still one level outside the obvious, so it's got a little bit tighter now when I drop that edge a bit. So still looking to buy weakness. This is a low volume area, so that comes out and it starts trading below that 6100s. I think we can certainly rotate back down in this range and even find ourselves testing the 6000s. So it could go pretty fast right back down here to test these lower areas. But so far, they're holding the 6100s. They're staying above it. And hey, it's Friday. Let's see if they... Fridays, usually I will get nervous on Fridays for the potential of a sell-off going into the weekend. But so far, we got mixed bags out of that. So it's there's no real rationale behind it. So I would start off looking to buy weakness. 61, 27, 26, 27, 61, 20s, 6105s, 60, 95s. Below 6105s, I think I'll take off the long bias. 95, one level outside the obvious, and below these two support areas, I think we are heading lower at that point. So, but you saw yesterday they probed pretty hard on the downside. And on the way up, I would be looking for short setups against the 40s, the 50s, the 55s, or 57, 58s, I should say. 65s for rotations back down. So we have a decent volume here to lean against now on the way up, since they spent some time up here and kind of developed these edges. So definitely a pretty good range bound setup. Now, I have still a bias to the upside given capital flow. That's kind of what's driving the bigger picture. Still, market looks like they want to take it higher. They're coming to balance at the highs, and it could go either which way. Move out of the middle to the upside would be a breakout and new highs. And move out of the middle to the downside would pretty much say, well, bears are taking charge. No breakout. I'm taking my money and going home. And then you get some selling on that. So looking for shorts again to 40s, 61.50s, 61.57, 58s, and the 61.65s. Looking to buy against the 26.27s, the 20s, the 61.05s, and the 16.95s for rotations back up again. So that's how we get started. Let's see if we get more of a range, more than a range bound market today. But I mean, you saw yesterday, it looked pretty gnarly, but in the bigger picture, it's not kind of quite moving a whole lot, but it looks dramatic on the short-term charts. And if you're in the wrong side of it, it can cost you a bunch of money. If not, you can make a bunch of money. So it could be that's the beauty of futures. Looking at the bonds and the NASDAQ. Bond market just slowly drifting to the upside. I would just say range bound. They're trading in this range. They're filling out this low volume area. There's been a pretty good one right at 115 here. That was this support here on that prior distributions resistance on this later one. And now we looks at we are right here filling out that low volume area. And they're probably going to stick around in this area for a bit unless we get something which is going to drive this market. And I don't know what we got going next week in terms of financial news, but it's at this point I would just start off range bound. And I would look to get short up to the 116.08, look to get long down here to the 114s, and then just trade this range back and forth. That looks like what they're doing. Given the overnight, I would be looking for early strength to get short against the 115 at 11.12s, the 18s. Looking to buy against support 115.02s, 114.28s. So pretty tight range. Below the 114.28, I would be looking for maybe a move to the downside. And above the 115.18 to 20, I would be looking for a move up here towards the 116s. So 2 levels up and 2 levels down. Maybe include the 114.24 if you want. But it's going to stay with a pretty tight range on the bonds. And if they break out of that range, maybe we get some dynamic going on. But right now it looks to me like they had a pretty good little move to the downside here, down to test that 114.05s. And now they are slowly drifting back up again. They're running into pretty good resistance here at the 15, 11, 12. But I would look for shorts there, and I would look for a short setup at 15, 18 to 20. And if they take out the 20s, I think we have a shot at getting up here to the 16.08s. But at this point, the bond market is kind of sleepy and just sideways. So that's how we get started on the bonds and NASDAQ. That little rally we got there. That's a nice one. 176 out to 220. That's a good 50 points. With NASDAQ, holding on. Same as the ES, they are taking out these areas of resistance. They're building value right at the 22, 160 to 190 level. And so far, not quite. They run it up here to test the new highs, but definitely in a spot where they can. So I would definitely start off a range bound, slight bias to the upside, same as the ES. They're going to buy weakness down to this level at the 22,060s. Maybe even lower to the 22,000s, but they're going to buy weakness to get started. And since just given the capital flow, the capital flow is pointed higher. I think the exchange member chart is just range bound. So given capital flow, we're pointing this higher, but it's coming to balance, and that's exactly what the profile shows you. And the market comes to balance, and then you're looking at the balance point and move out of the middle. That's usually going to be a piece of news causing it. some sort of information, some change in the dynamic. The United Health thing could be a drag. It could be definitely a trigger for something like that, but it's just one stock right now. And but you never know. You get a tariff announcement or something like that, you see the market go up and down. It's going to be at one point it's going to get desensitized to that, but initially it's a little bit sensitive. So looking to buy weakness at this point against the 22,170s, the 170s, 140s, 100s, 22,060s, and the 22,020s. And this is 20s. So I would say below the 20s, I would start thinking about the short side of the market. At that point, then kind of backed off a little bit. You can see a fair amount of range here. So if this area started heading back into this lower range, I think we started heading outside the what we want to be at. But this moved to the downside yesterday. It kind of reset some of these support areas. So that's 22,060s and the 20s. If both of those comes out, I would lean in on the short side and see if they can run it lower. Still looking for long setups against this 970s and the 940s as the levels outside the obvious. And and then if they take both of those out, just stay on the short side if they keep taking those support areas out. But at this point, we are pretty good. Most of the bulk of the volume is up here. So I mean, I'm not gonna if they start backing off the 22,100s, the 60s, and the 20s, these three support areas, all of them starts coming out, I would be a little bit concerned about the short side. Now, as usual, when the first part of the rundown is always the most violent one. Then you have the little burst at the very end, and so these support areas could certainly hold. That's going to be a little bit less aggressive buying them if they take out that 20 level, 22,020. And on the way up, looking for short setups against the 22,220s, the 260s, 290s for rotations back up, maybe up to the 320s or 315s here. And if they start taking out the upper areas, the 290s and the 315s, these two resistance areas, one level outside the obvious would be 345. But if they take those out, I think we are in a good spot to maybe actually finally head up and test these upper areas. So we'll see. At this point, yeah, starting off range bound, slight bias to the upside. Same as the ES. I prefer to buy weakness, given the capital flow is pointed higher. But both the exchange member chart is primarily range bound, so I would not be concerned about trying to get on a short trade here for rotation back to the mean. And if I get a good setup, I just keep my stop tight and make sure I get stopped out in case I'm wrong on that trade. So that's the way I'm going to go about on the Nasdaq. Finally, oil and gold. So gold, I would say we are back range bound. Same dynamic there. Capital flow is to the upside. They've been down here in this big range. Now it looks like they're building volume again here up against the 2950s or 45 to 50s. And as such, probably setting up another move higher. It could be if they can't extend past that 2963. They've been up here a few times now. I think we may be due for a little bit of a pullback on gold. To run it down and to kind of flush out some of the weak longs. You saw it happen a few days back. They did a pretty good run down here, but now they're back up here again trying. There's a net buying of gold going around. Probably concerns about tariffs and general concerns in the world, I guess. But there's definitely, from what I've heard the pundits talk about, there's a net buying of gold in the world, and that's usually a sign that there's something brewing or some concerns brewing. I think it's more. I think that may be overreacting. I think they're not necessarily overreacting, but it's this trade relation reset which is going on right now with the reciprocal tariffs, which is probably spooking people. People don't know quite how it's going to play out. So if they don't know how it's going to play out, it's going to be you're going to get people hedging their bets. Anyways, on gold, starting off range bound, looking to buy weakness. 29.39, what is it going to be? 29.40s, the 35s down to the 30s, rotations back up. I would say below the 30s, 2930s. I think we may be heading lower. That's going to take out this lower range, these ledges here. A two-letter ledge. C. Pierce was done probing it yesterday, or actually in the overnight. Sorry, in the overnight. And if they start taking that out, I think we can run it all the way down here to the 2885 again, pretty easily. And the way gold moves right now, there's a lot of range, If you want some action, you trade gold, but it's a really finicky market. It moves hard and then stops and reverses on you, and it's just not the same kind of dynamic you see on the ES and Nasdaq. So it's a little bit it's an interesting market for sure. So that's how we get traded on gold. Getting short against resistance. If you see early strength, I would try to look for short setups against. Not so aggressively on the 50s here, but maybe the 55s, 58s, and the 64s. They trade above that 63, 64 level. I think we have a shot at extending. So looking for shorts against these three levels, 55s, the 59s, and the 63s. Rotations back down. Looking to buy weakness, 39s, 34, 35s, and the 30s for rotations back up. And let's see if they break outside that range. Finally, oil. And oil is just kind of going back and forth, kind of driving us crazy. Not necessarily energy policy or energy markets are complex. So you have prices go up, you get a lot of people trying to produce. The prices go down based on oversupply, and then basically the whole thing starts again, geopolitical risk on top of that. And right now, I think the market is just in a holding pattern. So we have a pretty good range here. The upper edge being 73, lower edge 70, and we are strong in range bound. So that's how I would trade it. Range bound trading. Look to get short up to the 73. Look to get long down to the 70s, and then these support areas, and then just trade it as such. It's when they get ready to break out, it'll be pretty obvious, and then we can start looking more for a directional move. But it looks to me like everything is more in a holding pattern. So we're going to buy against the 7160s, 7115s, 7090s, 7060s for rotations back up. Looking to get short against 7220s, 7250s, 7280s, and the 7320s for rotations back down again. So fairly straightforward stuff on oil right now. All right, so range bound oil, range bound gold with a bias to the upside. On the ES and Nasdaq, both of them, we're going to start off with a range bound with a bias to the upside and see if they get some further continuation on the upside, or if they're just going to be sitting here twisting in the wind for a bit. All right, so that's how we get started. It's Friday. I'm going to wrap it there. So good trading, guys. And I'll see you back at 11:30 for the next update. All right, guys, later.